You secure a lucrative international contract. The client pays in full. But when the funds finally clear your account, the numbers don't match the invoice. This 3D block represents a $10,000 invoice. First, the SWIFT network takes a cut, as intermediary banks deduct arbitrary handling fees. Next, platform inbound processors erode the total. Finally, your bank forces a currency conversion, silently embedding a 3 to 5% markup. Add those deductions together, and you lose hundreds of dollars on a single invoice. Scaling an international client base is mathematically punishing if you rely on legacy infrastructure built to penalize cross-border commerce. To stop this revenue bleed, you have to bypass the SWIFT messaging network entirely. The process is called strategic decoupling. Instead of routing money across borders, you operate as a virtualized local entity in your client's region. With an Airwallex global account, you can generate domestic bank details, like a UK sort code or a US routing number, no matter where your business is headquartered. This map compares two payment routes. The red line shows the chaotic, multi-stop SWIFT network crossing multiple borders. The green line shows a local payment rail, like ACH or SEPA. By providing local bank details, your client's payment never technically crosses a border. It travels directly from their local bank to your local account. Presenting yourself as a domestic business to your international clients ensures you retain the total face value of your contracts. Setting up this localized infrastructure is straightforward. In the Airwallex dashboard, navigate to the Global Accounts tab on the left sidebar. Click Create, select your target client's location, and choose the specific local currency you need to collect. This screen shows the result. You are instantly issued a unique atopning matching your business, a dedicated local account number, and the regional routing codes. This entire provisioning sequence takes a few seconds. You do not need to register a foreign legal entity, visit a branch, or wait through months of compliance paperwork. Digitizing the creation of these regional bank accounts completely removes the heavy bureaucratic friction that usually stalls your global expansion efforts. Now that you have local details, you need to deliver them to your client. You can generate a secure, no-code payment link directly from your dashboard. Or, if you use standard accounting software, you simply copy your new account number and routing code and paste them directly onto your existing invoice templates. Step 3 is the most critical: the instructions you give the client. You must explicitly tell them to initiate a local transfer in their banking portal, not an international wire. If a client takes your local UK sort code but selects SWIFT transfer on their end, the funds get pushed out of the domestic rail and back into the legacy correspondent network, re-triggering the exact fees you set out to avoid. Providing exact instructions alongside your new account details guarantees the payment stays on zero-fee domestic routing. Collecting the funds efficiently is only the first step. Next, we have to prevent the double conversion trap. This occurs when a traditional bank auto-converts your incoming euros into US dollars, only to convert them back to euros weeks later to pay a European vendor, paying a markup on both legs of the journey. This flow diagram shows how like-for-like settlement solves this. An inbound euro payment bypasses the central conversion hub completely and lands securely in a dedicated euro wallet inside your Airwallex hub. Because the platform is natively multi-currency, funds sit in their original denomination indefinitely. You're never forced to convert. When expenses come due, instantly bridge those funds to an Airwallex corporate card, paying euro invoices with your euro balance and sidestepping exchange rates. With absolute treasury control, you dictate when and if a conversion happens based on market rates, rather than accepting mandatory fees from a retail bank. Let's look at this architecture from your client's perspective. When they receive your custom payment link, the experience is designed for high conversion. The check-in interface automatically detects their region and surfaces over 160 familiar payment methods, including local bank transfer apps and mobile digital wallets. Instead of typing out IBANs and manually approving wire transfers, a foreign client can settle a high-value invoice with a quick double-click and biometric confirmation. Removing technical friction for the payer means your invoices are fulfilled faster, accelerating your cash flow while building trust with international vendors. When you compare the economics, the legacy system relies on hidden margins, while platforms like Airwallex operate on a transparent model, with zero monthly fees and direct access to interbank exchange rates. This graph models a business processing $50,000 monthly, where 30% is international revenue. By cutting the typical 3 to 4% loss to FX and SWIFT fees, the business retrieves up to $7,200 in annual profit. Stop subsidizing outdated banking networks with your hard-earned revenue. Upgrade your global infrastructure with Airwallex to collect exactly what you bill. Scaling across borders is only sustainable when your financial architecture is explicitly designed to protect your margins.